Hello, my name is Cortney Heykoop. I'm with Clover Wealth Strategies. We are a financial services firm. We provide financial planning, financial investment, and a variety of services to our clients, most particularly special needs families. That is our main go-to area of expertise. I speak across the country with families as well as other financial professionals who are trying to make sure that everyone is on the right page and doing what they need to be doing in these very unique circumstances. I am going to go ahead and share my screen here so that you can follow along with me as we discuss some of the differences and strategies that we use here at Cloverleaf Wealth. So I am a special needs mom. You can see here, this is a picture of my daughter and her service dog. My daughter is now 18, so I look back with very fond memories at this picture. This is the day that Woody joined our family. Today, we are going to talk a great deal about tax, legal, accounting, all different types of topics. But I want to remind you, I am not a CPA and I'm not an accountant, although some of what we do all kind of overlap. You definitely want to make sure you are speaking with a CPA and an accountant on these topics. So let's get started as we're talking about financial planning in these unique circumstances, right? I always say financial planning is best described with the image of Mount Everest, right? It's the planning for the ascent as well as the descent. And in that point, some people call it, when they can stop working. I always say the point at which work becomes optional. And we can kind of do things a little bit more on our terms. But planning for the descent is just as important as planning for how we're going to get there. Especially for families such as ours, where we're planning not just for how our retirement will look, but how we're also going to be planning for our child during that time and planning for our child once we ourselves have passed. So today I'll kind of be talking about my holistic approach to financial planning. In the financial planning, we talk about cash flow and asset management and risk management, distribution strategies and tax strategies. And on the normal financial planning wheel, tax strategies and estate planning is really kind of how you fill that wheel out. However, for families like ours, there's really another component that we need to fit in there inside our life, and that's the special needs planning. So let's talk about the financial side first. The most important thing for families to keep in mind is that parents, we have to put our air masks on first. Flight attendants tell us this every time we get on an airplane. If the cabin depressurizes and the masks come down, put your mask on first so you can better assist the people around you, including your children. As parents, that's hard for us to do. We're so used to putting our kids' needs above our own. So I often receive calls where people say, I need to set up a 529 plan, or I need to fund a special needs trust for my child. And I say, okay, tell me about your retirement savings first, right? Are we taking care of ourselves first so that we are in a position to better support our children going forward? So let's talk about that. Let's talk about first our retirement, right? Retirement today looks very different than it did a generation ago. And I'm sure once we are at the point where we're retired, it's going to look even more different, right? So I always tell the stories of two amazing women in my life, Lily Mae and Patty. So Patty is on your screen right now. That's my mom. She is a retired school teacher She and all of her siblings went to school out in Notre Dame and are big fans. So she retired from the school district at 62. And prior to COVID, and now that the restrictions are limited, she travels a lot, right? She is still at 72, very healthy, very active. She spends a lot of time with her grandkids. She spends a lot of times traveling with her college friends and retirement buddies. That looks very different than the generation prior to that, Lily Mae, my grandma. Lily Mae raised her children and died on Victoria Street. Her porch was the porch to be at, right? She lived off of Social Security and a very small amount of savings. And she didn't really go much beyond the couple of blocks, right? Um, so the spending differences for Lily Mae in her retirement and Patty in her retirement are different. Retirement for Lily Mae was slowing down, no longer working, being at home, raising her kid, in the home that she raised her kids in, and living off Social Security. That was enough to get her through. Today, our retirement looks much different because we are a lot more active, we are a lot healthier, and we are healthy longer. So we kind of divide retirement today into two categories. That first part where every day is Saturday and your expenses are still quite high. And then the latter years where we do start to slow down. But at that point, maybe our health is deteriorated, so our health expenses may start ticking up at that point. We have some different challenges today. One that is at the top of everyone's mind is inflation, right? Inflation, when you are on a fixed income in retirement, has a huge impact. And whether or not your savings, as well as other sources of income like Social Security, increase enough with that inflation to keep up. Market risk, also very top of mind right now because we're in a very volatile market. So it leaves a lot of people who are in retirement wondering just how much they can safely take out in this down market without drastically impacting the amount of money in their retirement savings. So that leads into that savings withdrawal rate. How much can I safely withdraw? What are my distribution strategies? We used to say that you could safely withdraw 4%. The recession in 2008 changed that number down to 2.89. So slightly under 3%. So how much am I withdrawing? How long are my balance is going to be able to sustain that type of withdrawal is another challenge we face in retirement. A big one also is longevity. So we are living longer than ever before. So we want to make sure that we don't run out of money and that we are making sure that our income meets our needs, but also will be there for us throughout the years. Surviving the loss of a spouse in retirement is also financially difficult, not just emotionally difficult. When we lose a spouse, we could be losing that source of income if they received a pension and there is not a survivorship on that pension. Changes in how much we receive from Social Security when we have a spouse, also changes in taxes. So there's a lot of things that go into losing a spouse on the financial side as well that we want to make sure we plan for, especially if there's a big difference in age ranges between the spouses. And last but not least is taxes, right? They say the only things that are guaranteed are death and taxes. Wow, I'm really in a depressing conversation here today. But taxes is huge in retirement when you're on a fixed income. So making sure we have good tax strategies and we are tax diversified in our investments and investment accounts as well. So that talks about the kind of the overall financial plan, some concerns, some things we need to think about, plans that we are going to make. And then we kind of next want to look at the special needs side of things, right? Um, the first thing I always want to make sure is that my families have applied for everything that is out there and available to them, right? The first thing at age 18, making sure that we're applying for supplemental Social Security income, or if the parents don't have significant assets, then we're applying for that sooner. But once our child is 18, they are considered an adult and our income no longer matters. So make sure we're applying for that early on. I do have families come and say, it's not a lot of money. I don't really need it. I'm okay supporting my child. I'm not going to go through the hassle. I really recommend we do it regardless of the parent's financial situation. One, we can use that money to set aside to fund a trust or other long-term savings goals for the children. Also, it helps get you into the system and document it as having a disability should things come down the line later on. I have a case right now with a woman who is 50, but she never really received that diagnosis, right? So just trying to make sure that we have everything well documented and supported, but also that the system knows about our kids, right? So supplemental Social Security is very, very important. Also, once you retire, your child may be available for the disabled adult benefit under your Social Security disability income. Most of my special needs families, the children don't have enough work history to qualify for disability under their own work history. They do so under the parents. So once you retire, say, one of you starts taking at 62, then your child receives 50% of your Social Security benefit, and it does not reduce how much you receive. So it's very important that we do that. Also, it starts the 2-year clock at that point for Medicare. And that way your child can become duly enrolled in Medicare and Medicaid. That leads me right into Medicaid. Medicaid is extremely important a government program to become qualified under. It is means tested. It is state administered, so each state has their own program, and along those lines, they also have their own waiver programs. And often those waiver programs will help get support for attendant care or personal care aides, as well as housing, assistive technology, a variety of other services that could be available to your child under those. And of course, there's also local resources and supports with your ARC chapters and community services. Department of Health in the county that you live in might also have things available. So now that we have these programs available, our special needs planning becomes even more important because we need to protect those services should our child inherit money from us or from someone else, right? So like I said, most of those programs are needs-based or means-based, where you have to qualify because you do not have assets over $2,000. So, but at the same time, living off of $843 of Social Security supplemental income is not going to provide a very comfortable lifestyle for your child. So we want to be able to supplement and augment the services that our kids are needing, but we want to do so in a way that doesn't reduce their Social Security or Medicaid. So we create a special needs trust. I always tell my clients to make sure you are working with a elder law attorney who specializes in special needs. A general estate planning attorney is not specific enough for the special needs that you need have. So we will want to set up a trust. We'll look at the different types of trust. There's first party trusts, there's third party trusts, and make sure that they are set up in a way that protects all of the services. So like I said, we do that analysis of government programs, timing of those benefits, and we really develop the child's financial plan as well as the parent's financial plan. So this is a lot easier to kind of pinpoint and drill down with specifics when a child is in their 20s versus when they're younger. But I do begin looking at it when the child is younger so that we can anticipate what those needs will be, and how much we will need to fund those the trust that we have set up. If something happens to us, how much will our child need to survive at the level of comfort and life experiences that we want? So that evaluating the child's plan and the parent's plan gives us a way to come up with a funding strategy for the special needs trust. Another aspect of special needs planning is deciding a lot of those transition pieces when the child becomes 18 and becomes an adult. Will they be able to make their own decisions? Virginia, the state that I'm in, heavily supports supported decision making rather than really stripping the individual of all their rights. We also have guardianships and limited guardianships, so some rights are maintained, and conservatorship, which is the kind of the more financial side of the guardianship, right? So there's a lot of decisions that a parent has to make as the child becomes 18, and working with a good attorney as well as a financial planner versed in how all of these different things work and interact together is very important. So I talked a little bit about special needs trusts and why it's important. It's important so that the government benefits are protected. And if a child inherits $250,000 from a life insurance policy when mom or dad dies, that their Social Security and Medicaid is not cut off because they now have assets in their name. So there are two main different types of trust we deal with when we talk about a special needs trust. Special needs trusts are also called supplemental needs because they are there to supplement the needs that the government benefits do not cover, namely room and board. So the main thing is it needs to be constructed, the trust needs to be constructed and administered to not break that rule. So making sure that it does not cover housing, for example, or it, what it lays out the reasons in which you can use the funds. So once we've decided, we need or understand we need a trust, then it comes down to what type of trust we need. And families can have many different types of trusts, right? A first party trust is when the money belongs to the child, the disabled child. So that might be money the disabled child earns. That could be money that the child received from a settlement, a malpractice settlement, or any other type of lawsuit. It also is any money that is left in the child's name. So let's say grandma dies on March 1st. We have until March 31st to get that money into a first party trust in the child's name. um, before it is counted against them for Social Security and Medicaid purposes. Unfortunately, if grandma dies on the 28th, we only have a few days to get that in by the end of the month. But a first party trust would be money that is left to the child specifically. Third party trusts are funded by the family. So what we would want grandma to do is not leave the money to the child, but leave the money to the special needs trust of the child. That's the third party trust. And then it goes in there. There's no impact on government benefits. Third party is money that is not going into the child's name at any point, right? It goes directly from grandma to the trust. So it is not the child's money. It belongs to the trust, which is an entity in itself. Another key difference between a first party and third party trust is how that money can be left. So, for example, in a third party trust, you designate, if there is money left in the trust, when my child passes, I want it to go to these beneficiaries, maybe other siblings or family members or a favorite charity. In a first party trust, you can still designate those beneficiaries. However, Medicaid has first rights at it. It is subject to Medicaid repayment. So the state will come in and say, over the course of the person's life, we have paid X amount of dollars for their medical care. That is subtracted from the trust balance before it would go back to any family. So we always want to spend down first party trust first. And we also want to make sure that the third party trust is where the money goes. We want to make sure we're following up on our beneficiaries and speaking with anybody who might leave money to our kids to make sure they're leaving it in the trust's name, not in our disabled child's name. Another topic that often comes up when I'm talking about special needs trusts are ABLE accounts. The first thing I want to say is an ABLE account is not a replacement for estate planning. It is a great tool in our toolbox. I highly recommend all of my clients to have an ABLE account because it allows us some flexibility. It gives us some tax benefits. It is a great tool to have, but it is not an end-all be-all for trust purposes. Mainly, the main reason is it has a $100,000 cap. And then those balances do impact Social Security and Medicaid. So if grandma leaves money to an ABLE account and it's more than $100,000, we're in some trouble. Okay. So I know we are running quickly out of time. I get talking quick, but a couple things that I want to bring up. ABLE accounts are important because they're another tool in your toolbox. They give you some flexibility. Depending upon your state, there is a housing loophole where you can funnel money into the ABLE account that can be used to pay for some housing expenses. Like I said, it's not a replacement for estate planning, and it does have the 100K limit. So ongoing planning is incredibly important. I always tell my families, this is not a one and done. You need to be looking at your plan every year at the minimum. We need to review the special needs planning. We need to review tax planning, making sure that we are keeping your retirement savings diversified for tax treatment, giving us the most flexibility as possible in retirement. We want to make sure our estate planning documents and beneficiaries are up to speed. And also in financial planning, are our expenses staying where they need to be? Do we need to adjust anything in our cash flow, in our asset management, or in our risk tolerances? I'm going to finish up with some unique strategies that we can use that help us on the special needs planning side. Special needs are funded in one of two ways: life insurance and inheritance. So financial planning to make sure we're maximizing that inheritance, and also look at life insurance for ways in which we can cheaply and also make sure it's guaranteed to fund the trust with the maximum amount of money. There are many different types of life insurance policies out there, and there's no one that's a perfect fit for every family situation. So we want to look at the different kinds out there and figure out what's the best for you. Hybrid annuities are a great way to guarantee a set amount of income for your child's lifetime. Um, it's basically a way to create a pension for them, right? We know X amount of dollars that will come out of that annuity every year, guaranteed for as long as your child will live. Helps us reduce longevity concerns. So there's a lot of things we can do in the annuity sector there as well. Annuities are not a great fit for everyone. It depends on your situation and how we might want to best tackle that. Another thing is we want to make sure that the parents have adequate long-term care. This can often be in conjunction with your life insurance. This helps provide some tax benefits when long-term care is needed, but it also helps protect your nest egg when you are in those final years and your medical bills are increasing to, or beginning to really become substantial, especially if you're in a skilled nursing facility. Um, Another thing we want to make sure that we touch on is the consequences of assets left to the trust. There are different strategies that we can employ. If a family owns a business, how is that going to be liquidated? How are investments going to be liquidated or transferred into a trust? Life insurance, make sure your beneficiaries state the trust. And retirement accounts are important to look at, especially now that the Secure Act has come into being, because we can no longer stretch retirement accounts over the next generation's lifetime. However, with children who are disabled, you do still have a stretch there. So sometimes we want to look at which assets we leave to which child because of that benefit. And then also strategies for gifting during our lifetime. How do we want to fund the trust while we're alive? Will it only be funded when we pass, or will we be funding it ahead of time? One thing quote I'll leave you with is fair is not equal. It's making sure that everyone gets what they need. And in special needs families, that's often different, right? So as you're considering your estate planning and your special needs planning, you may need to kind of reallocate inheritances and things like that. And talking through with an attorney and myself can help you come up with the different types of strategies that you can employ. Here is my contact information. They will also be in the slides that will be distributed with this. Again, my name is Cortney Heykoop. I'm glad that you spent some time listening to me today, and I hope you find it educational. I look forward to chatting with you in the future if you have any additional questions. Thank you and have a great day. Bye-bye.